Arlyce has taken the classes that I've taught. We work perfectly together. She knows what I do. I know what she does. And the marriage between client and the practitioners that sit around the table here is a synergistic one. So with that, Arlyce, why don't you go ahead and tell us a little bit about what you do and what makes you unique?
Well, obviously, I'm going to have preferential treatment to this. I think having a CPA in your corner is extremely important. We become a strategic partner to you so that we are able to coach you every step of the way of how to run your business the most productive and efficient as possible. The importance of what a CPA adds is a skill that the average business owner doesn't carry. That's why they're not doing accounting for a living. They are selling products, or they are manufacturing something, or they are providing an architectural service, something entirely different than a CPA firm. So we add a value to them which really helps them run and understand their business. We teach them the importance of what a SWOT analysis is. And what that is it's understanding what your strengths and weaknesses are internally, and then understanding what your opportunities and threats are externally, which means that I need to understand what I'm really good at, and I also need to understand what I'm weak at. But more importantly, I need to understand what is my competition that's out there. What are my market segment in? How many clients am I going to be able to maintain? Really understanding what my opportunities are that I can't control and what my threats are. If there's 5 CPAs that are right next to me in the same building, that's a huge threat to me. So what we try to do is really teach our clients that, you need to understand your business and you need to understand your competition. So what I feel a really good need for a CPA is from day one. Get us to be in the door with you, help you build your business, understand your tax ramifications so that you're paying the least amount of tax. You're not paying any penalties for not filing things on time. You're not paying penalties for not reporting to the state for your proper sales tax. You're doing everything according to schedule, and you know what your expenses are, so you can budget what your needs are based on what you're capable of making. So I think a CPA really should be your partner from day one. It's really important, Todd, that your client or my client understands when and how much they have to pay in for an annual estimated tax payment or a quarterly estimated tax payment. Clients very seldom understand these rules and get themselves into a lot of trouble because they don't pay the right amount of tax when it's actually due. So let's just kind of explain what is estimated taxes. And what they are is, as a self-employed individual, because you don't have a paycheck, you're not getting withholding taken out of your W-2, you are required to pay in your taxes on your own. The government doesn't want that check once a month, but they do want it on a quarterly basis. So the times that they require you to make your quarterly estimated payment is April 15th, June 15th, September 15th, and January 15th. Now what we do with our clients is we kind of play with the January 15th one, because if my client wants to be able to take that state estimated tax as a deduction, they need to pay that in by December 31st, or it's going to be in the next year's state tax deduction. So it's just something that we try to make sure our clients understand, that you may want to pay that state estimated tax on December 31st rather than January 15th when it's actually due. The calculation that you need to make for estimated taxes is going to be 90% of your current year's tax obligation, which in the previous example of federal and state taxes, we talked about what that obligation is. Or if you don't have an idea what you're going to make for the current year, you can go off of 100% of the previous year's tax obligation. So we try to tell our clients what they feel is best. If they should use 100% of last year, just calculate that and make those estimated payments. Or if they think their income is going to drop drastically and they don't want to have a huge refund at the end of the year, then we take and pay attention on a quarterly basis what their income is, so that they're only going to be paying in at least 90% of their total current year's tax obligation. It's really important that they also keep in mind that if their income is over $150,000 of taxable AGI, that they're required then to pay 112% of the previous year's tax obligation and not the 100%. So those are the things that they need to keep in mind, that their taxes are due on a quarterly basis, and if they don't pay them by the due date, there will be a penalty on each payment that was paid and due. Even though at the end of the year they may have a refund, they still could end up having a penalty for not having paid their quarterly payments on time.